I think we all foresee some tax hikes coming in the cap gains and of course, income, right? God forbid if we see some sort of increase in corporate or S corps, but I think a lot of people right now, including myself, are looking for how to deploy capital now to get ahead of these increases in taxes. Help us understand the tax advantages of self-storage, right? We know there's bonus depreciation and cost seg and all that with multifamilies and the residential real estate. What benefits can an investor utilize as tax benefits in self-storage?
Yeah, I mean, I think it varies. What's unique about storage, let's talk on the development side first. If a community needs it, you could get some sort of, say, tax advantages, we'll call it. Now, that can vary greatly based on community, and that's not my area of expertise. So I just want to share that.
Sure.
Do a Google search. Yeah, I mean, on the value add side, I mean, you don't have inventory. So there's a lot of things you're not going to see in separate property, but it is real estate. So I think in terms of, say, the value, as opposed to, say, the tax savings per se, but what else can you gain out of this? There's a boatload of ancillary revenue that, say, if I took over an office building or a strip mall, I'm really not going to get from the real estate itself per se. So two things, one is, and you have to once go back to my caveat on permitting, in the back, you can put boats, you can put a bunch of things that can be highly lucrative, especially if that space really isn't there. The second thing is, as you walk in, boxes, et cetera, things like that. The other two things I think are the most important. One, and I shared this on Clubhouse last night, is partnerships. So a smaller community, you might know the person that does all the moving, that does the flood repair, let's say, that does the carpeting. For a small property, as percentage of revenue, this can be a significant bump. And then the big thing, which why I love storage, and I bring back to my community banking example, is that you can, versus community banking, like you have to make sure everybody opts in. It's kind of the opposite of storage, meaning on day one, you can put everybody on insurance or your insurance plan and they would have to opt out. And for an extra, $5 to $7 a month, most folks, that's kind of benign, so they're not worried about that. Mm-hmm. That can bring, I'd say it's almost like a new line of revenue, although obviously it's still under the storage model.
Yeah, so to net that out, what I'm hearing is, and again, assets have different purposes depending on who you are and where you're at on your tax strategy. And I do encourage my clients always consider tax implications, but this is really a mechanism that you can pivot and maneuver to kind of squeeze the juice out of the lemon more and more through a variety of opportunities and revenue. More so than, let's say, like a multifamily new build, you get that awesome benefit of the bonus appreciation. So for someone that has maybe some carry forward losses that they need to leverage, this could be a really good asset too, given its income production.